Happy Monday, everybody. Welcome back to the Everyday Growth Advisors live stream. It is about to be a jam-packed schedule today, along with special guests. I hope you guys are having a wonderful Monday morning. Lots of interesting stuff happening all around the world as the craziness of a extended count, lockdown, and some other stuff. Just, I don't know, man. We're just in a tornado at this point, right? The whole world's just losing its mind, and just thank your blessings for being safe, healthy, and everything else. I appreciate all of you guys being here. If you are here from all parts of the world, I know that we have now a very international stream where people are joining us from all over the country. So today's stream is going to be another special stream. We're going to have another special guest. His name is Mikemas. For all of you who are part of OptionsSwing, you will know Mikemas as one of the professional traders that is famous for the wheel cycle. And we'll be having him on in about 30 minutes from now, since this is going to take quite a bit of time for me to go through the first half of the stream. We will be cutting short the ticker breakdowns today, just in the interest of keeping them as succinct as possible. I want to keep a good portion of this stream for Michael to come on and give us some wisdom. So I hope that you guys will enjoy it. As usual, my only ask for attending this live stream is that you smash the like button. That is all that you need to do. Of course, if this is your first time and you like the stream, don't be shy. Click on that subscribe button so that you will be notified when we go live. So welcome. Let's get straight to it. As we do, let's break down the news. See if there's anything interesting on there. With the Bloomberg today, we have China halting some U.S. farm imports, threatening the trade deal. Sounds like we may have some turbulence with a little bit of the bilateral ties being hurt. Also, the U.S. starting to put sanctions on Hong Kong, which is going to also damper the trade deal. Chances are that there is lots of tensions that are going to run high between both the nations. Look toward fear to start creeping up again, which is something that we have been looking at for a while. If you were here in the previous live stream, I have already said numerous times I'm going to be opening up hedges to my long-term portfolio. I will be opening up positions in the fear index, UVXY. I will be starting to buy into fear indexes so that I can have a downside hedge against this market, which is starting to creep up for absolutely no reason, right? So we'll get into the nitty-gritty of the SPY breakdown in a couple of minutes here. I just want to continue with the news, and then we're going to do the technical breakdown, do the pre-market movers as we usually do. Welcome in. I can see you guys on the other screen there. U.S. futures fluctuate on China pausing imports. So, the futures have been kind of up and down the whole pre-market. We'll see what actually happens today. Let's see what else. Goldman says U.S. job market showing early signs of recovery. Okay, sounds like they know something that we don't. Maybe, I don't know. Singapore looks Okay. By the way, I'm in Singapore. I'm out of quarantine. If you're wondering, I finally served my 14 days. I'm out. I'm currently, trying to weather through this so that I can actually come back to the United States of America. I'm waiting, and so I really hope that I'll be on the same time scale as you guys. Honestly, the same time zone. I'm sorry. All right, not much on Bloomberg, right? Front page. Obviously, this, as we know, this political protests are going on with the death of the that one George Floyd guy, and it's turning into really big disaster. Lots of people protesting on the streets, coming up with all kinds of stuff. It's basically going to extend the lockdown for a prolonged period. So, just gotta ride this one out. Majority of the front of the Wall Street Journal is kind of just that news, in my opinion. U.S. stock futures wobble as China tensions strengthen. So you have the same thing going on. What's important to note between both news outlets is that they are finally starting to cycle bad news, which is now the time when you should be preparing for a possible fall within the next day or two, I would say. In all seriousness, I will be opening up hedging positions this week. I will be buying up UEXY calls just in efforts to hedge my portfolio for the maybe like about 50 days out. Okay, so that's going to be my strategy. We're going to do the technical breakdown in a bit, and I'll show you why. So in pre-market movers, let's see. Not sure what this company is. Looks like a penny stock, biotech. Not sure what this one is. Nothing interesting in the pre-market movers today, except for Black Ridge, which I'm not sure what that is neither. We do have big numbers coming out today, manufacturing numbers for the PMIs. So this one will be the one that to watch at 10 today. Make sure that you don't overcommit yourself. And as usual, we'll be talking about this later when we have Mike on. Do not overcommit to your positions. Okay. So we will go through this in a little bit. Let's get through the pre-market breakdown with the technical update on SPY. As we know, I have been following this for a while now, right? With the SPY technical update, you can see with the extensions that I've drawn, let's kind of move it to a 4-hour and you may see it clearer here. The 61.8 fib level has been a key level for SPY to accumulate at for a long time, where we found rejection. We finally broke out of this region here, and we are now seeing a extension to the upside with a couple of impulsive and corrective waves. Failing to break this level twice here. It seems like the 305 level or 306 level seems to be a tough level to break. So we'll see if we can continue this upward momentum to break out of this region, which would cause upward pressure on SPY all up the way to this level here. I think that the natural top would be around this level here, which should be around 309. Okay, so this is the level you want to watch. 309 would be the natural top on SPY, which would be kind of coinciding with all of these other candlesticks up here. This may not be a proper resistance, but it could be. So I like to think of it as the level at which majority of the candlesticks meet. So this could also be the reversal here. It just depends on the way you look at it, obviously. So the extension up here, we've had a multiple number of days with the extensions upward, and so it's about time that we see some kind of a red day to push this down to the 61.8 or 23.6 fib retracement. That would be the levels to watch over here, going downward here, and then if we are able to break this, we will go down to the 38.2 and the 50 fib retracements here. So those would be the levels to watch, and just be aware of that. Okay, so extensions to the down would be there. I don't think there is much upside here to bet on. I think that there is a better downside to bet on. The risk to reward ratio favors the downside right now, hence it would make sense to bet on the downside. All right, we can also see the readings for OBV starting to creep up here. RSI is looking to starting to look a little overbought, so it might be about time for SPY to have a little bit of a correction downward. Okay, so that kind of concludes the technical update with SPY, and we'll see what else we have over here. Thank you for all of you guys being here. All 104 of you, I appreciate you guys being here. And remember, I only ask of one thing: like the stream, click on that like button. That is the only thing that I would appreciate you guys doing. I'm going to spend the rest 20 minutes now to answer any of your questions that you have and go through any tickers. The moment that we hit about 8:55 or 8:57, which is my time, 8:57, I'm going to start to phase out the stream, and then we're going to get Mikemas on, which is our special guest today. He is a veteran trader, and I will let him introduce himself so that he can do some justice. Okay, so welcome in. I really appreciate all of you guys giving your time into the stream, and I'm going to take these questions now. So keep posting your questions, and I'm going to get to them in a timely manner here. Okay. All right, let's get it. Welcome. Good morning. Sounds great. Good morning, everybody. Super excited. Hi, Jason. Welcome in. Morning. Good morning. Stay safe. Indeed, stay safe out there, guys. Make sure that you do not go out for whatever reason. All kinds of people getting killed out there. All right, let's have a look. Zynga, first one. Ooh, Jason with the call out today. All right, Zynga, $9.612 expiry. Let's have a look at it. Zynga. This was a stock that was famous for farm rule at one point in time. I remember it was this hell of a Facebook stock. kind of like a game on Facebook, and they got famous, huh? Oh, it's looking nice. It's $9 calls, definitely in the money by now. Let's see if it moved. Let's see if it moved pre-market. I want to see how it's performing. Zynga. Let's have a look. Oh, it's already up 5%. So this calls are going to be deep in the money. Good, nice job holding that one through the weekend with those diamond hands. It's looking good. I think I would hold it all the way through the first 15 minutes and maybe stagger your sells, get rid of a couple of contracts here and there like we always do. I think that would be a good strategy for Zynga. You know, slowly wind down your position, sell a couple at the beginning, sell a couple during the middle, sell a couple during the end of the day, take your profits in bite-sized pieces so that you average in and averaged out. I think that would be the strategy for Zynga if you're holding it and you made some decent money on that. Let's have a look at this. Thoughts on AAI, $10.50, 612 expiry. What is AAI? AAI. Oh, what is that? Did you mean AAL? I think you meant AAL. I'm pretty sure you meant AAL. Yeah, you meant AAL. Oh, I read it wrong. That's what it is. AAL. Okay, so 1050, 612 expiry. Yeah, I think you're okay with this one. It has been showing some kind of willingness to go up there to the what is this, $12 level, $12.50 level. I think that this has a slight upside here. A bounce on the $10 and $30 level would show, or actually a bounce here, right here, would show, the willingness for the stock to go test this level once again. The volumes, even though they have outflowed, you'll have to watch for a bounce here. This will be the main thing. If you're holding those calls and it breaks below this level here, you want to cut your calls if it breaks below this level here. So anything below 970, 980 is a cut. If anything, if it bounces over here or here, you might want to hold that contract. Although I must say 612 looks a little short of an expiry to me, but you might still be okay with it. So let's just keep our fingers crossed, okay? Yeah. Moving averages seem fine. It seemed like it wanted to break out, but it didn't. So yeah, that's my thoughts on American Airlines right there. Good morning. Welcome in. Welcome in. Nice to have all 116 of you guys here. Remember, like the stream. That's the only thing I ask. If you haven't subscribed, subscribe. Click on that subscribe button so that you get notified when we go live every Monday, Wednesday, Friday. Today we have a special guest, and if we get enough likes, I believe that Jason said, the founder of OptionsSwing said that he would come on the stream as well. So let's get them likes up so that we can get Jason to eat his words and get on the stream. All right. Thoughts on docu call for 155.65. Sounds like it's a very close expiry. So 6.5 is going to be this week, and you said 155. That no, I don't recommend. Oh man, that's a tough one. Looks bullish to me, but is it going to get to 155 by the end of the week? That is, I don't know, man. I think it might be a bit too much. It is overextended. I think it needs to come down first before heading up. I would recommend for you to roll your contract out to a further expiry, at least a month out. The 6.5 expiry, no good for your contracts. So sell it, get rid of it, and take the profits, dump it into something much better. In my opinion, that's the way to go. I do like this chart though. Very bullish momentum, break out of the resistance here. Volume has been increasing nicely, and a lot of volume has been flowing in the past 2 days. In fact, with big volume buys all across the board. So DocuSign is looking and it has earnings coming up on 6.5. So if you're planning to hold this till earnings, it might be a good earnings play, but I can't, it's going to be still a flip, man, honestly. So 6.5 DKS, $40 calls. DKS, what is DKS? Dick's Sporting Goods. 6.5. Geez, why do you guys keep taking 6.5 contracts? You guys need to chill with those, man. Don't be taking weeklies over the weekend. Oh man, $40 calls. Okay, $40 calls for this week. Once again, this is another tough scenario. Look at the average movement, right? The average movement is about $3, $2, and you're saying you want to go up by $4 this week. The average movement for this stock in a week is not even that much. So I think your strike is a bit too far out and you have too little time. Your contract's going to decay very quickly. So I would recommend you to either roll them out or do something that, you know, you can prolong this contract out, because I don't think that, you know, you're going to see this likely to succeed, in my opinion. I think you need to roll it out. Welcome to the stream, guys. Oh, mama. 165 of you guys. Thank you very much for being here. Appreciate your time. Remember to like the stream if you haven't already. Welcome to the stream. If this is your first time, make sure you click that subscribe button so that you get notifications, okay? All right, let's move on here because I have about 15 minutes left and I want to cover as many of these as possible before we get our special guest on the stream today. So how about work? $38 call, 6.5 earnings on 6.4. Which option do you think will work? Ooh, that's a pun in a pun. Work. Well, I do like this slot. I do like this stock personally. Work. Slack Technologies, great stock to own right now, especially $38 calls. Once again, man, I see the same pattern with all of you guys. You're taking far too out strikes with too little time to go, and I'm not sure why you guys do this. I think that you need to really reevaluate the way that you're treating these options, because I know that you're going for the high risk, high reward play, but remember, with these options that you take, the decay is going to be extremely fast. The moment that you hold this option through Monday and Tuesday, on Wednesday, this option is going to have a crazy decay just because you haven't hit the strike. Okay, so make sure if you are taking an option for this week, it has to be at least close to the money or at the money. If not, you're not going to make no money on this option, okay? And I hate to, you know, rant about it, but I'm just being real with you guys. I'm trying to keep it real and try to be honest as possible. Don't do the mistake of buying cheap options and then getting, you know, holding them and losing money on them when you could have just made money on them, okay? So remember, this is too far and too little time for you, okay? And I don't recommend you holding it. I don't think that you're gonna have a very sleep like a easy sleep in the night. Okay, so my recommendation is to roll them out. Ooh, okay, 200 people here. Let's see if we can get through these really quickly here now. Okay. XSPA signed a deal with GFK. What do you think? I'm not sure what that is. Hello, Emilio. How are you doing? Welcome to the stream. 821 DKNG. See now, 821. That's an option I can deal with. See, $30 puts for DKNG. Let's have a look. This is DraftKings. I see a lot of you guys have been playing DraftKings. $30 puts though. Ooh. I mean, yeah, you probably will hit it, but I think it's too far out the money. You should have got something like $32 puts. Those will be nicer because it's a very high chance that it comes down here to hit this old resistance, which is now going to become new support, right? You can see this here, this resistance, which was here prior, right? Resistance is now going to become a support. So you should have got something like a $32 put so that it would have the chance of being in the money by your expiry. But I mean, it's going to be close to the money, so if you're going to plan to hold it for a long time, sure, I guess that's a great one to hold. I mean, it's kind of up to you, but I think it's a bit too out the money, in my opinion, for a put especially. MGM, 2150, 6.5, Vegas opening June 4th. Well, if you think that Vegas opening on June 4th, 2150, let's have a look. MGM, I have been looking at buying some of the stock. 21, too out the money, man. It's too out the money. I'm telling you once again. You guys are serial, like, if that was a term I could use, you guys are serial out the money buyers. That's all I'm gonna say. Too out the money, too little time. What that means, your contract's gonna drain value, and that's it. It's simple as, it's clear as day that you're gonna end up holding a losing contract. Okay. So I'm gonna be as honest and as blunt as possible because I'm not gonna try and sugarcoat any of this for you guys. Welcome into the stream, guys. I appreciate you guys being here. All 244 of you right now. Remember that if you haven't liked the stream yet, please go ahead and click the like button. That is the only thing that I want, and I hope that you will do. Click on the like button, please. And remember to subscribe if you haven't, okay? Thank you. Great. Let's see what else here. Zynga, $1.8 billion acquisition. That's nice. SWN, 350. What is SWN? What's SWN? SWN stock. This is a $1.6 billion market cap company. Energy company though, still better than most of the things that people are trading. I am for energy sector, but I think the market cap of this company is too small. So I don't recommend trading it. That's just my personal preference. And I don't like to go through stocks, excuse me, with less than $10 billion in market cap. I would like to, SDC, $8 call, 619. Let's have a look at what is SDC. Once again, Smile Direct, this is a tele-dentistry company. Less than 10 billion market cap. Let's skip that one too. Please, guys, don't be trading stocks that are less than 10 bill. You're going to get yourself into a lot of trouble, in my opinion. Try to trade stocks above 10 bill. That's, where the liquidity is going to be, and you won't be caught holding the bag because nobody can manipulate that market. I would like to know if it's possible to analyze earnings stocks 2 weeks prior to the earning week. Yes, it is more than possible to analyze an earnings stock, but always remember, when you are playing earnings, it is always, always, always a 50-50 flip. You could take a coin and flip the coin, and you will get basically a chance to always flip that coin every single time you play in earnings. NTNX, I love this company. 25 calls this week expiry, huge sweeps. Okay, let's have a look at it. I'm willing to meet you halfway there. NTNX. Let's see. 20. Yeah. See. Okay, that's not bad. See. Okay. Now this is a scenario which I can work with, and I can actually advise you that okay, this is a decent one, right? Don't be taking $29 calls for this week. 25 is still within the range, right? You can see the difference what I'm telling you guys about, and look at the amount of volume that's being bought, right? You have huge chunks of volume that have been bought on the stock. Obviously, some volume outflow too on the last few days. You can see that. But overall, the stock has been getting bought up. So I do like this setup here for NTNX. I think that this contract is going to do well for the 25 calls this week. I think that, yep, you should be fine with this contract. So same goes for this one right here. Great. I think these two are great contracts to hold. I do like that one. And remember, if you're here for the first time, do smash that like button. That's all I'm asking you for. All 304 of you guys. This is the most number of people we have had on this stream. I appreciate you guys spending your time being here. And boy, do I have a surprise for you guys, because we have Mikemas coming on early today, and it's going to be an awesome, awesome day. So, all right, let's have a look at this. AGHT calls, LUV, Southwest. I like Southwest as a company. Smash the like button. Thank you so much for doing that. I'm going to go through a couple of tickers, but let me just go down and see if somebody said something here that I need to be aware of. Leave a like, folks, and we'll make it happen. Jason is going to come on the stream if you guys make it to 120 likes at least, okay? So make sure that you smash the like button, because I'm trying to have Jason on the stream. He's the founder of OptionsSwing. Make sure that you do it so that we can get him on here. If you guys have never, looked at OptionsSwing, go look at OptionsSwing.com. It's the partner of this stream, so... Good morning, good morning. All right, let's have a look at this. Key thing to what Taryn is saying here: stop buying weekly expiry options and holding them through the weekend. You are only exactly what Jason just said. When you buy a weekly expiry, let's say you bought it last week on Thursday or Friday, and you say, "Oh yeah, I'm buying the option for next week." This is a major mistake that people make. Why? Because they hold it through the weekend, and you donate exactly to Mr. Theta. And Mr. Theta, he's working over the weekend. So remember, when you donate to Mr. Theta, you're giving value up from your option premium for absolutely no reason. Let me give you a prime example, right? I bought Uber on Friday as a day trade, okay, because I saw some heavy flow coming in for Uber calls, okay, and I bought the calls right when they were trading somewhere here, and then the stock spiked up, came down, spiked up. Guess what? I had the ability to hold Uber through the weekend, but did I? No. Even though it was tempting because of the volume that came in, I sold my contracts on the top for a profit and ended the day with a 40% profit on this trade. Why? I didn't want to donate my money to Mr. Theta. Why would I want to do that over the weekend? So remember, these are things that you have to keep note of. Don't be doing things like that, because it's not going to work in your favor, okay? That's just a quick little thing I want to just tell you guys. So, like that, smash that like button, guys. We need to get Jason on here. So 120 is what we need. At least 120 to get Jason to come here. So, all right, let's go through these again. I have about 6 minutes left till I get Mike on the stream. So we're gonna go through these real quick here. AGHT, $20 calls. AGHT. What is the stock, first of all, before I even go through it? Remember that if you come to the stream with a stock and it's that, oh, I'm not going through it. Anything less than 10 billion, I'm not going to touch it. Why? Because it's manipulable. Like, it can be manipulated, okay? Imagine if it's less than 10 bill, somebody can buy a whole bunch, maybe a couple of 100,000 shares, and, you know, pump the stock up. So I don't recommend choosing contracts like these. They're gonna put you in a lot of trouble. Now, Southwest, this is a good one, right? I've gone through this in my previous streams. If you haven't checked it out, please do. Remember, leave a subscribe as well if you haven't already. Make sure that you go check out some of the videos that I have. There's a lot of gold content on my channel for you guys for free. So Southwest is one of the companies we've been looking at for a while now. We like this as a bullish play for the long term. It did come down nicely. I think it might be a prime time to buy it. 33 calls. Yep, that seems about right. You could get 33 calls. I think that I like those contracts. This is a good one to hold. At least it's not this week expiry. You have some time. You still do have about 2 weeks. I think that is a good one. So Tesla. Ooh, haven't done this Tesla one for a long time. Jeez, let's have a look. Tesla for the 9:30 calls for this week. Ooh, 2 out the money once again. Sorry, man, 2 out the money. It could move, but I'm not gonna bank on it. I'm not gonna bet my money on that one. Netflix, please give me a call out, like a proper call out with the expiry and the thing. If not, I don't know what I'm helping you with. Coca-Cola 4827 calls expires. Ooh, that's a weird number though. Did you is that your cost average, or I'm kind of confused how the strike can be having such a decimal place. Coca-Cola calls expires this week. Let's see. 48. Ooh, that was a big kind of a jump here too. Big volume came in, but then a big sell-off as well. Something weird happened here. So yeah, possibility, but I once again, that looks like a weird chart to me. So you got to be careful with that one. Just get a refresh in here real quick. I want to make sure I'm not losing anything here. Let's have a look here. 81 likes. All right, we need to get 40 more likes, guys. I hope that we can smash the like button so that we can get close to at least 120, and that would really make my day. I would really appreciate that. All right, Disney. 124.87. How are your strikes so weird? Is this your break-even price, or I'm kind of confused, man. Either way, I can just look at them and tell you your strikes might be a bit too close, man. Your dates, the expiries. Good morning. QQQ puts 230.65. So once again, man, I'm not sure why you guys like playing these weekly contracts. You guys are gonna get burnt, and then you're gonna just okay. Well, this one still might be a little bit okay. Yeah, you're probably okay with this one. QQQ puts for 230, probably hit it. But once again, I don't like the expiry. I absolutely do not like this expiry. It's too near. Should I ride VZ 54 calls, 65 expiry? I'm profitable now, but not sure if I should trim close to open. Verizon, let's have a look at that one. Verizon Communications. Oh, wow. 54 calls, 65 expiry. I think you should cut them right at the open. Take profits, move on. All right. I know that they're cheaper, but the point is, cheaper doesn't mean better. You'll lose value faster. So, yeah. This volume, I'm guessing that you mean this volume indicator is the on-balance volume indicator. I've been thinking of puts for target due to riots. It will be puts for everything generally. Let's see if there's anything here that's not. Smash the like button. Thank you very much. Also the subscription button. Thank you. Hey. Okay, let's see. I don't think I'll be able to do any more callouts here. So, all right, cool. I'm gonna start, getting Mikemas on the stream. So let's get this party started over here. Without further ado, I don't want to waste no time. I want to introduce our special guest today. Michael is a veteran trader from OptionsSwing. He is in the business of professional wheel strategies, where he is able to have a very, very systematic system that benefits from selling options premium. And I want to give him a very warm welcome today to the Everyday Growth Advisors stream, where we are going to welcome Michael today. Hey there, Michael. How are you doing today?
Doing well. Can you hear me okay?
Yep, I can hear you okay. I'm going to go ahead and share my screen over here so that we can get this party started. Cool. I think you should be able to see my screen here, so it should be easy for you to kind of follow along as well.
Perfect.
All right, awesome. Coolio. Well, welcome in, Michael. How are you doing today?
Thank you. Pretty good, man. Surviving citywide lockdowns and just living the dream. What can we say?
Yeah, it's some stuff going on the news, man. People throwing rocks everywhere and tear gas firing and bullets. My goodness, what a day to live in.
Oh yeah, definitely. It's crazy.
Welcome onto the stream. It's lovely having somebody to talk to. As I was telling Jose the last time, sometimes I feel like I'm talking to a wall, but it's all good because I have people listening on the other side telling me, what a beautiful voice I have. So,
yeah, I hope we get the same love on that one.
Yeah, man, dude, you have a great voice, I think. So why don't you tell us about yourself a little bit? Give us a little bit of a background about yourself, kind of like how long you've been trading, that kind of stuff, and then we can get into the juicy stuff in a little bit.
Cool. Yeah, definitely. So I really started getting into trading, I would say, around the 2008-2009 meltdown, which was such a great time to get into trading.
Oh yeah.
Yeah, because it was right before that hit, and after watching a bull market run, you're thinking, oh man, anybody can make money in the market. I can just throw a dart at a stock, and I'm going to make money. And then the market always finds a way to cut your legs. So. At that time, options were not very prevalent. It wasn't well known, and so there was a company called Better Trades that was kind of going across the nation. And it's one of those things where they do a seminar. You go there one night, and then they're selling you their package. Of course, you're like, "Ooh, look, this guy made $40,000 in 2 days off of $5,000," and you're really intrigued by this because you're like, "How is that possible? I've just been trading stocks, and." You see people do this with penny stocks, but penny stocks are really risky. So I actually paid $3,000 for this course, and it was over 2 days just to learn what options are. So nowadays, with Discord groups, and you can just pay $80 a month and learn how to trade options effectively. That's a steal compared to what it used to be. So
agreed, man. Agreed. Yeah, definitely.
Yeah, absolutely. So yeah, and since then I've pretty much tried every option strategy under the sun. Some have been successful, some have not, and you just really learn a lot of fundamentals over that time, and you learn to kind of adapt to the market. Because the important thing to think about anytime somebody has a strategy or you have your own strategy is that you can't rely on just one form of trading all the time, because the market always finds a way to mess with that. So even years of back testing, you're like, hey man, this works. I did all my back testing. This is my worst drawdown. It's going to work. And then that one condition that it could just completely crush your portfolio, that condition will happen. So
I completely agree with you, man. That's something that happened to me very early on as well, and I had to learn from that mistake. It's one of those things that I think many people go through, and then they're like, oh man, so at what age did you make your first investment? Like, let's say your first long-term investment. What age did you first start investing? And like, who got you into it? Like, who got you into the stock market at all?
Yeah. So it was around when I was in college. I was actually working at a law school in the IT department.
Oh wow!
And yeah. So this guy I worked with was he was really big into stock trading, and I didn't know much about it at the time. And I'm sitting here making I don't know, like $10 an hour or something at that point.
There's always that one friend who's the devil, and he gets you into
this. Exactly. And he's like, man, I just making a killing, man. Like I'm almost making more money off the stocks than I am at my job. And I'm like, ooh, man, I want to start dumping money into this. So that's when I first started doing my investments and learning exactly what stocks were. Because of course, when you start working, unfortunately, we don't have a lot of good education on investing. It's just kind of like, hey, here's our 401k plan. Just dump money into it, and you're just kind of tossing money into this black abyss you know nothing about.
Absolutely.
And then over time you start to realize, like, oh, other people are managing my money, and I'm paying 1% or more a year, no matter if they're up or down. And after a while, you just start to learn, like, maybe I should look at learning this myself and seeing if I could do a little bit better. So that kind of got me to where I was.
Nice. Okay, awesome. It's great to always hear a little bit of background, so people know a little bit about you before we, get into the juicy stuff. I know that, today we're going to be discussing a pretty heavy topic, which is, many of our viewers are going to be actually very surprised that we actually chose this topic to discuss, because I don't think that many people, practice the wheel very efficiently, or they do know what it is. So we want to actually cover it so that, it's something unique that people don't usually get to see. So I'm so happy to have you on board with the EGA live stream. Really appreciate you being here. If I haven't already said it, Michael, this is
absolutely,
a lovely opportunity for both of us to really showcase something different to this world, that we can give some knowledge back about things that we've learned about. So maybe we should kind of dive straight into it. I'm going to go ahead and open up your the wheel strategy the picture, so that we can get this rolling.
Okay, perfect.
Awesome.
Yeah, so real quick fundamentals behind what a wheel strategy is I don't think a lot of people understand that you have two options really when you're trading options. You can buy to open them, or you can sell to open them.
Yep.
And I think that one of the things that you start to realize when you learn that, hey, I can sell an option is the risk mitigation part of it. Because when you buy an option, when you buy a put or buy a call, all your conditions have to be met for that to be profitable.
Correct.
It needs to move in the direction that you picked. So if you buy a put, the stock needs to go down. Correct. If you buy a call, the stock needs to go up.
Yep.
And it needs to go a particular amount, whether in the money or if you're way out of the money, it really needs to move to even for that to be profitable. So you need not only the direction, but also the magnitude for that to be profitable. Now, when you sell an option, you have the complete opposite type of profit scenarios. So, for instance, if I sell a put, basically if the stock goes up, I'm profitable. If the stock stays sideways, I'm profitable. Even if the stock goes down a little bit, I'm still profitable. Correct. So you have a lot of different profit scenarios to hit. Yep. So that's what's great.
I just want to very, very briefly, kind of for the viewers who know absolutely nothing about options at all, I just want to very briefly cover something for 1 minute. So what Mike is actually trying to say over here is you have two options to buy when you are actually deciding, right? You can choose to buy an option or sell an option, right? And when you're buying an option, you pay money, so it's a debit to your account, right? And you're paying somebody for time value, okay? And so every day there's Mr. Theta that comes knocking your door, and this reduces the value of your premium, right? And you're paying that money to somebody who has sold you that option, right? Well, what Mike is saying here is you could be the seller and have somebody pay you. For example, we're looking at VTIQ over here. If you wanted to buy VTIQ at $22, well, you could sell to open, right? You could sell to open VTIQ $22 calls. And what that means, sorry, not calls, sell to open $22 puts.
Right.
And what that means is that you would be selling that option to somebody who thinks that VTIQ is going to go down to $22, and they pay you the premium for it. And in the process, as the option price goes down, your premium is decreased. But if it hits the strike, then these shares get assigned to you. What Mike is saying is, even if it goes down by a little bit, you can still take half your profits off and take your premium away, lowering your cost basis of the shares, right? And majority of the time, if the stock remains where it is or goes higher, well, in these both cases, you get to keep the full premium of that option. So just to kind of give you guys, a little bit of an introduction here, because I don't want you guys going completely blindsided. Okay, awesome. Continue on, Mike. Please go ahead.
Yeah, no worries. Yeah, and you brought up a key point, earlier when we're talking about, short-term options and, saying, oh, theta will kill you. If you're a buyer of options, yes, theta is your enemy. When you're a seller of options, theta is your best friend. Yep. Because what you're doing is, as a seller of the options, is you're banking on this theta decay, on this time decay, and that's just money in your pocket. Right. So I kind of make it akin to, when we talk about the wheel strategy, I like people to kind of think about it as, utilizing assets and making money off of it, kind of similar to, say, like rent. Like Absolutely. If I buy a house, somebody's staying in my house, and month to month, they're paying me a little bit of money just to stay there. This is a very similar concept. And this is kind of how I started really getting into selling options, is because I was doing real estate investments. Right. And I started kind of thinking about the stock market in a completely different way. I was like, well, is there a way for me to make money in a similar way? And that's when I really started to embrace the strategy. So if we look at kind of how the strategy works, it's really simple. I know the graph is a little convoluted at some point. Yeah, people look at it like, what the heck is this? Yeah. But it's actually really easy to understand. So, we're actually going to run through VTIQ as well, which I like. But a quick explanation on this before we actually get into how this works is your first move is always going to be to sell a put. And what we say is a cash secured put. Mm-hmm. What that means is that you have the cash or collateral to buy 100 shares of that stock at the strike price. So again, if we're going back to VTIQ and using the 22 example, right. If I sell a 22 put mm-hmm. on VTIQ, that premium, maybe say $200, I get that premium. And in my account, I have just kind of set off to the side $2,200 to buy 100 shares of that. That's called the collateral. Uh-huh. Again, going back to the profit scenarios, you see here, if the stock goes up, the option expires, boom, you're keeping that full premium. Because the important part of the premium, you get that in your account immediately. As soon as you sell that contract, you've got that cash. Correct. So now it's just it's a point of how much of this cash are you going to keep. Exactly. So then scenario 2, let's say the stock goes down. And again, if the stock would have to go down past your strike price for you to be assigned, if that option goes down to $22.01 by expiration, mm-hmm. that option expires worthless. You have your full premium. Right. So if it goes down below that, then you buy the stock at that price. Mm-hmm. Now, the important thing to keep in mind as you're tracking this is that, we were talking about cost basis. Your premium is going to lower your cost basis. Exactly. So even at VTIQ at $22, if you get $200 for that premium, now you actually are only paying $20 per share because you already got $2 per share exactly. or $200 uh-huh. for that. So then if you go to the second part of the wheel, you'll see you have 100 shares. Yep. On that 100 shares, anytime you have any stock of 100 shares, and this is kind of akin to what I was talking about with the treating it like real estate. Your 100 shares is your asset. And so this 100 shares, you now have the ability to sell a call on. Right. And so you can sell a call contract, so now you're here in the second part, you bought VTIQ at $22 a share. Mm-hmm. And so now you can sell a 25 call, right. let's say, on that 100 shares, and let's say you get another $200. Right. Well, there's your quote unquote rent yep. For holding the stock. And now you got another $2 a share. So now your cost basis is $18 a share yep. because you've gotten $400 in premium. Uh-huh. And what you could do, and what I often do is following this wheel, is I'll sell another put. So right, now I could just say, you know what? I'll sell another VTIQ put mm-hmm. for, say, 16. Mm-hmm. And what this does is two things. It satisfies a dollar cost averaging strategy. So anytime that you're looking at even buying stock and the stock market goes down, what does smart money do? Smart money doesn't panic and sell. Smart money adds to their position exactly. because they're dollar cost averaging. Yeah, exactly. They're bringing their costs down because now they're like, hey, I'm going to add stock at a lower level. This is exactly what you're doing, but you're doing exactly what you did in step one. So you're selling a put. You're getting that premium regardless. You only buy the shares if it goes below that strike. So a lot of cases, I'll be honest, I think I've maybe one time or two times in the past 6 months have even gone to the third step of this. Most of the time, I sell. I sell that put. That put expires worthless. My call, I've already sold that. Right. Usually the shares get called away. But important point on that second step, you've got premium going in two ways. So again, when we sell that put, that's another $2. Yep. Say if you're selling for $200, so that will again lower your cost basis on your original shares. So yeah, so now you've bought the stock. The stock has gone. Yeah, it's very cheap. So if the stock stays at $20, but now your cost basis is about 16. So even though the stock has gone down from its original value, you're still well in profit. And that's the power of the strategy. It satisfies a lot of things. It's low risk, and it's low risk from the standpoint of, your worst case scenario is you're going to buy shares. It's not like buying a call and put where, it went completely against me. Now the value of my call or put is zero and I've completely lost that money. No, absolutely. If it goes down below that strike, you got 100 shares. And then you can just continue to add to your position, or you can sell calls on it. You've got a lot of options at this point to generate income off of those positions. The second thing that satisfies is portfolio rebalancing. This is the main reason I use this, is for portfolio rebalancing. So I tend to look at candidates that have maybe dropped, and that's when I try to set my initial position. The important part, especially when you sell a put from the onset, is you want to look at a position of a stock that you like, but a stock that's pulled back a bit.
Right. And something that you don't mind owning, basically, right?
Exactly. And the benefit of this is that when a stock pulls down a little bit, the volatility value in option premium has gone up. Right. So when you sell a put, you're actually getting more juice inside of the premium, and you're getting more money on that, on the initial put. So you got that initial fallback, you sell a put under that, it keeps falling. It's okay, because then you buy the stock and then you can sell another, you get to the second step, you're selling another put, you're selling a call, you're getting income two ways off the shares that you have. And if it goes down again, it's okay, because you just add another 100 shares in your dollar cost averaging. And what's cool is that when you get the bounce back up, then you're profiting not only on the increased value of the shares, but you're also profiting on any of the premium that you're selling. Yep. So a prime example that I have, if anybody wants to go back through my channel, is that you'll see some trades that I did on Win earlier, WYNN, and that one, the stock, basically I bought and sold the stock at the same price, but actually made an extra $2,400 on that thanks to the premium. So yeah, it's a really cool strategy, and something that's good for balancing out your portfolio, and just another strategy to utilize to kind of use in different market conditions as well.
Gotcha. Yeah. So, dude, thank you so much for sharing this with us. Because see, we get to actually hear it from your perspective, like the way that you think about it, and it's perfect. Because you see, this is basically for the person who doesn't mind owning the stock. They don't mind getting, they're waiting for the stock to come down. And so the best strategy for doing that is, while you're waiting, you might as well get paid. So by selling those puts below, exactly, you wait to get paid, and then you take half the premiums off when it's going your way, because the premiums start to spike when the stock starts to sell off. And then you basically buy those shares at a discounted price because your cost basis goes down. And then you sell calls against them. And then if you want, and if the situation permits, you could sell puts against those. And it's a perfect scenario to just keep flipping over and over, so that you can, basically get your cost basis adjusted so far down that at some point of time, you don't mind those shares getting called away, right? So
absolutely,
I absolutely love this strategy, and I can't recommend it enough to people who have dividend portfolios as well. Especially, obviously, you don't want to get your shares called away, but it's a great way to lower your cost basis. So,
absolutely.
I love
Yeah,
this.
and yeah, exactly. And even if your shares do get called away, sometimes that's okay because, the market doesn't usually go in a straight line up. I know it kind of seems like it has since, back in March. But a lot of times, the stock may pull back maybe after earnings or something like that. And then you'll have an additional opportunity to just start selling puts again on that. So
yeah, that's the best too.
Yeah, exactly.
That's the best scenario to take advantage of too, because right after earnings, volatility is super high. So premiums are once again juiced up. So, it's
absolutely. Yeah. And side note on this, I actually like doing this for earnings. So I think a lot of people go for, hey, I'm going to YOLO this earnings. And, it's just, you and I talked about this, but it's what I call like hope and pray it goes my way. That's sometimes what I kind of think about when buying a lot of puts and calls. I'm like, oh man, I hope it goes my way, and it's a lot out of your control. But with earnings, most of the time I don't know. But one thing I do know is around earnings, there's a lot of volatility built into the premium. So you actually could play earnings safer by just selling a put. So, so usually there was one example, I think that it was a low dollar stock too. I think it was Lake, Lake. And I think at the time it was maybe around $21 a share. And I ended up, instead of buying a call on it, I was still pretty bullish on the stock, but I was like, I don't know, maybe it could go down after earnings. So I ended up selling a put, $17.50 put on that. Wow. And I got like 70 or $75, but that's okay because I'm still in the green. And that stock ended up going down. I think it went down to, about 18 a share or something like that. But what's cool about that is even if it went down a little bit, I'm adding those shares at a discounted value. But the fact is all the calls that everybody bought went to zero, but I still made money. You know what I mean? And that's what I love. I really like employing the strategy around earnings too, because I feel it's a safer way to play earnings.
Absolutely, man. Dude, that is such a great strategy. I actually never thought about that way of doing it too. I gotta definitely see, the thing is, I'm more of like a risk averse person, Mike. So I generally don't like to play things for earnings, but I definitely like this idea of selling puts for earnings, or selling. It depends on the situation, obviously. But if it depends on your slant. If you're bearish or bullish. But I definitely like that strategy where you can sell puts and collect premium on things for absolutely, very little risk, especially if you don't mind owning the stock. So.
Absolutely. And I know we don't have a lot of time left, but I'm glad that you brought up that term of risk mitigation, because I definitely would like to kind of make some comments on that.
Oh yes,
because
please do. I've been waiting for somebody to come on the stream and echo my sentiment. I feel like I'm the only one on here that says that. So please do. I'm gonna write them down over here. So please go ahead.
Yeah, absolutely. I think that a lot of new traders, this is the one thing that I can say. It's really exciting to look at profit potential and just kind of like, ooh man, look at all this money I can make. But just know that there's a journey in between.
Right.
And the most important aspects of trading to be a successful trader, and you'll see it in my way of trading. Kevin FOMO does a lot of risk mitigation in his trading when you break it down. Yeah. And the important part of this is that risk mitigation and capital preservation are the two most important things that you need to think about long before profits. And so what I mean by that is a couple of things, and these are a couple pitfalls that I see a lot of people doing. Say you have a $5,000 account. I have a lot of people that may send me a direct message and say, man, I blew up my account. And, the first thing I ask is, what is your position sizing? Right. Because I think a lot of people just, they have a $5,000 account and they're putting 20% of their portfolio into one play.
Oh yeah.
That is a recipe for disaster. So one of the most important things that I can just kind of state to a lot of the new traders that join OptionsSwing is that you really need to look at your position sizing and limit that as much as possible. Even if you have a small account, there are a lot of options and ways to play that you could do that you're not risking a high percentage of your account per trade.
Yep.
Because if you're risking 20% of your account at a time on each trade, if you're wrong 5 times in a row, which
done.
Can definitely happen, yeah, you've got like almost nothing at that point. So, yep. and then you're out of the game. So the important part is the second part, capital preservation. You want to stay in the game because, you're going to lose money, like period, the end. You are not going to be 100% trader. I'm not 100%, nobody on OptionsSwing that's making call outs. They're not going to be right 100% of the time.
Absolutely.
And you're not going to be right 100% of the time.
No.
You will lose money. So you need to know that, and you need to make a plan that lowers your risk to make sure that you preserve as much capital as possible so you can stay in the game, sharpen your skills, take any of your losses as an education. Don't dwell on it. Just kind of be like, all right, I lost money. What went wrong? Write down the steps you took. Was it a bad entry? Was it, did I not get out in time when I had a certain amount of profits? Did I get greedy? Things like this. These are the types of things that you need to think about when you're getting into trading.
Absolutely. I definitely echo that sentiment. And I cannot, say it enough to people that, keeping a risk management strategy where you have between 1% to 5% risk per trade is a definite way to prolong your success. And especially since this whole profession is a profession where you go into the system and you know that the market is rigged against you, you are basically walking into a system where the odds are stacked against you. So if you don't come out with a strategy that gives you at least, a 51% win rate of some kind, and the only way you can do that is by managing your risk, position sizing. So to many people, I always say, keep your risk low. And if you don't have an account, for example, if you have a 5K account, right, and you're going to risk 5% of 5K, that's $250, right? That means you have to live within that $250 trade and don't trade more than $250, no matter how tempting it is. Remember that if you increase your 5% to 10% risk, then you can only take 10 trades. And if you go into a losing streak where you take more than 10 trades and you lose, then your account is done. So just echoing what Michael said, you got to really manage your account size, and that is the key to how great traders make money, right? I think that majority of people join in with $1,000 with the aim of flipping it to 2,000, right? And you're like, and you know what's the worst part? They actually succeed doing this. They succeed, they do it, and then they flip the 2K into 4K, okay, and then they succeed. But because they don't practice risk management in between, what happens is one day they bet off all of the 4K and there goes all of it. And then they ask themselves, why does God hate me?
Yeah, exactly. Yeah, it doesn't go their way. They're like, oh man, I'm just, I'm doomed. Yeah, but that's an important point. And I've noticed it's a couple of people had asked, like, what percentage trade are you comfortable with? I think personally you should aim, and of course when you have a smaller account it's going to be a little harder, right, but try to limit it as much as possible. But I think you should aim to 1% to 2% per trade maximum.
Yep, I agree.
Yep. I don't ever really do more than 2% on any trade. I think that's just risky.
We actually had almost 400 people on the stream today, according to what YouTube tells me, which is crazy, Mike. I really appreciate your time today and being here. We had almost double the amount of people turn up for this stream today. Almost 400 people at the peak I saw earlier. I want to really thank you from the bottom of my heart for being here, and I'm going to have you more often onto the stream. We're going to definitely do more conversations back and forth. I know it's a minute to the bell, and I want to make sure that everybody has time to get to their trades. So I want to thank all of you guys for being here. We got to 120 likes. Jason is going to have to be a guest on the stream. So he will be coming on next on the stream, the founder of OptionsSwing. I can't wait to have Mike on again, as well as Jason, the next time. So once again, thank you guys for being here. Make sure you smash the like button, hit that subscribe. And I'll see you guys on Wednesday. Once again, let's give a really, really warm thanks to Michael for sharing his wisdom, and you're going to see more of him in the next stream. Ding, ding,
Thank
ding.
you very much.
Ding, 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 and happy trading, guys.